Ladies and gentlemen, welcome back to the studio. Right now, a lot of people are freaking out about crypto. We're seeing a lot of prices in the red. We're seeing people worried because of two big announcements that just came out. So I want to take a minute to talk about this. First, we're going to go over what is going on with the SEC and regulators who just announced a big decision about Bitcoin ETFs, Bitcoin future ETFs moving forward. And after that, we're going to talk about crypto exchanges, specifically Robinhood, and some news they just had as well. Also, quick reminder is that we are continuing to add new spots to the Patreon community. So in addition to benefits like daily live streams and buy and sell alerts, which have yielded some of our members returns of over 1,500%, you'll also get early access to my new NFT collection called Only Bears, and you'll be able to purchase any NFT you want for 50% off if you join our Patreon group using the link down below. So right now, the overall crypto market is at a $2.49 trillion market cap. And while everyone is freaking out because of these couple of catalysts that have come out with the overall market, in terms of technical indicators, things look great for the overall market still. If we look at 2017 versus 2021 and we compare them, we can see that we are right on track still to reach new record highs to go to $100,000 per coin by the end of 2021. This is in line with Plan B, who is the creator of the stock to flow model, his price predictions. And if we just look at these charts right here, we look at the Fibonacci retracement levels, we can see we are right on track. We are at that 0.236 level. We saw a little bit of a correction, much like we saw in 2017, nearly lines up month to month, exactly what happened back in 2017. So in terms of technicals, things are still looking really good. But the reason why we're seeing a bit of a scare in the market is first, because a company called Direction, probably saying that wrong, but we're just going to say Direction. They just filed for for short Bitcoin's futures ETF. This is important because this essentially is going to allow institutions to easily bet against the price of Bitcoin. Like when you're shorting something, you're essentially saying, I think that this asset is going to drop in the future. You're saying, I think this is going to perform poorly, and if it does drop, well, you make money. So that is why people bet against the market. They can do it by shorting. Anyways, so with this new fund, Direction, they just filed to launch their own Bitcoin futures ETF that would short the price, of Bitcoin futures contract. This is important. They said that generally the fund will maintain its short exposure to Bitcoin futures during periods in which the value of Bitcoin is flat or declining, as well as during long periods in which the value of Bitcoin is rising. So ultimately, they are always going to be betting against Bitcoin. And this is a little bit of a big deal, causing a little bit of a scare in the market because now people are saying, well, institutions are going to pile in and bet against Bitcoin. They can easily do that now. I don't think that's the case. I think a lot of people are freaking out about this, but we got to remember, just the other day, let's say in October 2021, we saw the first ever Bitcoin futures ETF roll out. We saw over $1 billion of inflows in a single day because of this being launched. So it's not like institutions have been looking to short Bitcoin. Like, yes, sometimes they do for short term, but for the most part, all institutions are excited about getting into Bitcoin, excited about the technology long term. So while this is normal, we're going to expect all new types of Bitcoin futures products released. I don't think it's a bad thing at all. I just think it shows that the cryptocurrency market is maturing and we're finally starting to see it go a little bit more mainstream, becoming more available for institutions. So while some people think this is a bad thing, I just think it shows that overall crypto is maturing, gaining more attention, more traction in the mainstream financial world. Second thing going on is that Robinhood had a bit of a surprise the other day with regards to their cryptocurrency business. So Robinhood had their Q3 2021 earnings call, and during this call, they announced that their crypto revenue tanked. It dropped over 75% from $233 million in the second quarter of 2021 to $51 million in the third quarter. They went from $233 million down to $51 million. That is a massive drop. That is not good at all. And the main reason for this is because of Dogecoin. Dogecoin had driven a lot of their crypto revenue, and with not many people buying Dogecoin in Q3, we saw this drop. This brings us to some of their big announcements. The first was that Robinhood said that they have not yet added any new cryptocurrencies. They said that they're awaiting regulatory clarity before they're going to add any more. Right now, they only have 7 available to trade. And this presents a problem because right now, Robinhood is a place where a lot of people go when they want to get started with investing. Whether that's with cryptocurrency or stocks, people like Robinhood because it's easy, it's not intimidating, and they market themselves as, investing for just the regular everyday person. So because of this, a lot of people, first of all, Robinhood stock tanked. It dropped significantly, but also people are a little bit worried because they didn't announce any new cryptocurrencies to their platform. Yes, they have a wait list already of over 1 million customers waiting for their crypto wallet feature, but still, they didn't announce anything big with their crypto business other than that it's struggling, that it dropped a lot in Q3. One thing about this, though, which brings us to the next point, is with regards to Shiba Inu. A lot of people were expecting that Shiba Inu was going to be listed on Robinhood. They were going to announce this at their earnings call. They did not, but I think this is definitely going to happen soon because Robinhood, crypto business is struggling. How do they get more business? Well, offering some sort of meme coin. I know Shiba Inu isn't solely a meme coin, but it does have that same sort of effect. Bringing Shiba Inu onto Robinhood would get more users for Robinhood, would help Shiba Inu's price. And right now, many people are saying that Shiba Inu could actually surpass Dogecoin in terms of price because if it gets listed on Robinhood, that'll help push the price higher. But also, Shiba Inu is just gaining a lot of momentum, a lot of attention. Right now, we're seeing it at that number 11 position, climbing very, very quickly and not very far behind Dogecoin anymore. So right now, that's what's going on with the overall crypto market. A lot of people are freaking out because Robinhood had a significant drop in their revenue and their cryptocurrency business is struggling. Also, people are worried because of this Direction company. Direction, they filed for a short Bitcoin's future ETF. It's going to make it easy for institutions to short Bitcoin. Both of these things are making a lot of people worried with the overall market, but if we look at technicals right now, if we look at the overall trends, there's nothing to be worried about. We are mimicking the exact same price movements of 2017, which still puts us on track for well over a $100,000 per coin Bitcoin by the end of this year. Let me know your thoughts, though. I'm interested to see what you say. I hope you enjoyed, and I'll see you guys in the next episode. See you guys.